Moat Main, hedge fund thinking for your daily life. That feeling. The one where you're doing everything right, and nothing changes. That's not failure. That's compounding pretending to be broken. And 99% of people quit right here. In the next 14 minutes, you will see exactly when the curve bends, and why most smart people never reach it. Let me define compounding clearly: small, consistent actions that produce nonlinear returns over time. Not 1 + 1 is equal to 2. More like 1 + 1 is equal to 3, then 1 + 1 is equal to 5, then 1 + 1 is equal to 50. But here's the trap: the first 5 years feel like 0. Year 6 feels like a tiny win. Year 10 feels like magic. Most people quit in year 3. Here's exactly what they quit on. Modern life trains us to expect immediate evidence. You post something online, refresh for likes. You invest money, check the price tomorrow. You start exercising, expect change in 3 weeks. We've built an environment optimized for short-term emotional rewards. But compounding punishes short-term thinking. Because the first phase is psychologically brutal. The curve is almost flat. Effort goes in. Nothing appears to come out. You save for 8 months. Still feel broke. You upload 20 videos. Nobody watches. You read books for a year. Still feel average. That emotional valley. That's where compounding tests you. Charlie Munger once said, "The big money is not in the buying and selling, but in the waiting." Sounds simple. Until you realize waiting is emotionally expensive. Waiting feels lazy. Waiting feels irresponsible. Waiting feels like falling behind. And that illusion destroys compounding everywhere. People interrupt investments before the curve bends. They abandon careers before expertise compounds. They destroy relationships before trust compounds. They switch strategies every 6 months because consistency feels boring. But boredom is the entry fee. Because if results arrived immediately, everyone would stay consistent. The reward exists precisely because most people cannot tolerate the delay. Most people think compounding only applies to money. But money is merely the most visible version. In reality, the entire world runs on compounding systems. First, financial capital. Returns generating returns. Interest earning interest. Tiny percentages repeated for decades become enormous differences. But financial compounding is usually powered by something else first. Second, human capital. Skills compound. The first year learning a skill feels awkward. Year 5 feels competent. Year 15 feels almost unfair. Because eventually your brain stops remembering information, and starts recognizing patterns before other people can see them. A great negotiator senses tension before words reveal it. A great investor recognizes risk before headlines mention it. A great writer notices confusion before readers feel lost. That is compounded judgment. Third, social capital. Trust compounds. One sincere relationship doesn't change your life. But hundreds of sincere interactions over years create a reputation that opens doors automatically. One recommendation leads to another. One introduction creates another opportunity. One act of reliability compounds into future trust. And here's the magic: all 3 reinforce each other. Better skills, better opportunities, higher income, flexibility, deeper relationships, better decisions. The flywheel strengthens itself. This is why successful people often appear lucky. You're usually seeing multiple compounding systems interacting simultaneously. Warren Buffett is the greatest living example of compounding. But most people misunderstand why. They think Buffett became rich because he picked amazing stocks. That matters. But it's not the main lesson. The main lesson is duration. Buffett started investing at age 11. And he kept the machine running for over 80 years. That is the real story. If you chart Buffett's wealth over time, something shocking appears. Almost all of it came after middle age. The overwhelming majority arrived after age 50. Not because Buffett suddenly became smarter at 50. Because compounding finally had enough time. Imagine two investors, one earns extraordinary returns for 10 years. The other earns merely good returns for 60 years. The second investor often wins. This is why Buffett protects time more aggressively than anything else. He avoids unnecessary interruption, complexity, emotional reactions. Because compounding is not mathematically fragile. It is behaviorally fragile. Fear interrupts compounding. Ego interrupts compounding. Impatience interrupts compounding. Buffett understood, extraordinary outcomes come from ordinary behavior repeated for an extraordinarily long time. Not intensity. Consistency. The snowball became gigantic because he never stopped rolling it downhill. Charlie Munger expanded the idea beyond investing. To Munger, wisdom itself compounds. Every useful mental model strengthens the others. Psychology plus economics. History plus decision-making. Mathematics plus judgment. This is why Munger read constantly. Not for trivia. For compounded understanding. And Munger also understood something terrifying: a few catastrophic decisions can erase decades of compounding. One addiction. One reckless investment. One giant ego-driven purchase. One terrible relationship. Compounding works both ways. Debt compounds. Regret compounds. Neglect compounds. Distraction compounds. The person who wastes 1 hour every day does not merely lose 1 hour. Eventually, they lose years. This is why Munger loved inversion. Instead of asking, "How do I become successful?" he asked, "What guarantees failure?" Then he avoided those behaviors relentlessly. Because surviving long enough is one of the greatest financial advantages on earth. People think compounding is mostly about maximizing gains. Munger understood that protecting the downside is equally important. Every great life is usually a few good decisions allowed to compound uninterrupted. Here is the complete model. At the center, time and consistency. Not intensity. Not motivation. Not inspiration. Consistency. Repeated actions sustained long enough for nonlinear returns to emerge. Then the three forms of capital reinforce each other. Human capital, financial capital. Financial capital, freedom and flexibility. Social capital multiplies opportunities. Eventually the system accelerates automatically. The flywheel turns slowly. Then eventually, the flywheel starts turning you. But three forces destroy compounding. First, interruption. Every unnecessary reset damages the curve. Constantly changing strategies. Constantly starting over. Constantly reacting emotionally. People dramatically underestimate how expensive restarting is. Second, negative compounding. Credit card debt compounds against you. Poor sleep compounds against you. Bad habits compound against you. Toxic environments compound against you. Life is not neutral. Tiny repeated negatives become enormous liabilities. Third, impatience. The deadliest one. Because impatience sounds reasonable. Asterisk, it's not working. I need faster results. Maybe this strategy is wrong. Asterisk, but the curve is supposed to look flat early. That is not evidence the system failed. That is evidence the mathematics are functioning normally. Most people quit during the invisible phase. The winners are simply the people who stayed consistent long enough to reach the visible phase. So how do you actually apply this? Here are 6 practical ways to build compounding into your life immediately. 1. Automate investing. Not because it's exciting. Because removing decision-making removes emotional interruption. Fixed percentage every month. Behavior first, money second. 2. Choose one skill with long-term leverage. Writing. Coding. Negotiation. Communication. Sales. Practice consistently for years, not weeks. 30 focused minutes per day equals 180 hours per year. Over a decade? Transformational. 3. Protect your reputation obsessively. Trust compounds slowly and collapses quickly. Every interaction either deposits or withdraws. Think in decades, not transactions. 4. Reduce negative compounding aggressively. High-interest debt. Poor sleep. Constant distraction. Toxic environments. Most people focus entirely on maximizing upside while ignoring the leaks sinking the boat. 5. Create systems instead of relying on motivation. Motivation fluctuates. Systems compound. The person with sustainable routines beats the person with occasional bursts of intensity almost every time. 6. Extend your time horizon. Most people overestimate what they can do in 1 year, and underestimate what they can do in 20. Compounding rewards people who think longer than the crowd. Because long time horizons eliminate most competition automatically. Start yesterday. Start today if yesterday is unavailable. But start before the curve bends. Because once the curve becomes obvious, the best years were already built quietly in the dark. Compounding is not magic. It only looks like magic to people focused on short time horizons. In reality, it is one of the most predictable forces in existence. Tiny actions. Repeated consistently. Over very long periods. That is all. The difficulty is not understanding the math. The difficulty is surviving the boredom, the doubt, and the invisible years before results appear. Most people want dramatic change. Compounding offers quiet change instead. Almost too quiet to notice at first. But eventually, the quiet becomes impossible to ignore. 10 years from now, your life will largely be the result of what you repeatedly did when nobody was watching. Not the dramatic moments. The repeated ones. The quiet ones. The boring ones. That is compounding. Pause the video right now. Look at your life. What's one area you've been consistent in for 6+ months? Write it down. Then unpause. Now drop your answer in the comments. I'll reply to the first 50. Because even with compounding, one stupid mistake can wipe out 20 years. That's what margin of safety prevents. If this channel helps you think longer term, subscribe. Moat Main is building a library of mental models designed to outlast the algorithm. Next up, margin of safety. The rule that keeps you alive long enough for compounding to work.